Good morning, everyone. This is Jeff Cooper with the Daily Market Report coming to you on Tuesday, August 14th, and we're going to walk through two setups, intraday alerts on DOCU, DocuSign, and CVNA Carvana that we sent out uh, to subscribers this morning. Just after the open, we sent an alert to subs to take a starter or pilot position in DOCU. After watching it trade for a bit, we sent a note to complete the position to a full position as it pulled back towards 56, and we'll take a look at the intraday action in a moment. Be that as it may, the stop on the average position is 54. The reason we took the position is because DOCU looks poised to test all-time highs near 65, 66 up here. So the risk to reward is nearly 4-to-1 stacked in our favor. The setup is a cup and handle. I've been stalking DOCU since it broke out of a consolidation here on August 2nd. I almost pulled the trigger on August 8th here when it carved out an outside up day to a new recovery high, but I sat on my hands like Dr. Strangelove, not wanting to buy it after a multi-day run. Luckily, I got a pullback and I was stalking it, hoping that it pulled back for at least 2 to 3 days, and that would satisfy my +1, -2 buy setup in tandem with a back test of a bow tie of the 50-day and 20-day moving averages. In other words, a 50-20 bow tie. The +1, -2 daily buy setup is as follows. The 3-day chart must be pointing up, and that occurs when you have 3 consecutive daily higher highs, which you can see you certainly had here. The -2 part of the buy method, of my buy method, is satisfied when you get 2 consecutive lower daily lows while the 3-day chart is pointing up. Now, it doesn't have to be immediately following a turn up of the 3-day chart or while the 3-day chart is just after it turns up, but many times it does. Many times you see that 2 consecutive lower lows almost immediately. Be that as it may, I was looking for this pullback here, and this morning we sent an alert. Let's take a look at the 10-minute first. Okay. Here we go. Sorry about that. Let's take a look at the 10-minute first. And you can see that DOCU gapped up, pulled back, and into the gap where we completed the position. So we initially bought here a pilot position in case it was a gap and go, and then we decided to complete the position as it pulled back and actually undercut the open gap from this morning. However, we completed the position here, and now you can see that it triggered an opening range breakout on trade above the first 30 minutes range. That occurred right here at about 57.30, trade above 57.30, and DOCU extended. Now it's pulling back, as is often the case, to backtest this opening range breakout and the little ultra short-term support at the 20 period on the 10-minute right here where the opening range breakout occurred. So this is textbook bullish behavior, and we are looking for a move up to test the highs or even exceed them. That's the first blush. Checking the hourlies. You can see that that little pullback that we're talking about to backtest the opening range breakout is occurring from a hourly holy grail. the 20 period on the hourlies, this red moving average here. So if it gets a another another drive, we see another drive, and it gets a second wind later today, then the expectation is it will pull, it will drive up towards the 59 and even the 60 strike here. And that, as I see it, this 59 to 60 level is initial resistance. Just wanted to show one thing here that's important. As I always like to say, the market, not only is it not a fine Swiss watch, but you've got to be able to put your thumb over some of the price action sometime. So this is not a idealized cup and handle, but it's within the spirit of a cup and handle, and that's what you want to consider. The market is often not a Rembrandt, but more of a Picasso. So the second setup that we sent an alert out today was Carvana. And here's a daily Carvana. It's been in a runaway move since June, as you can see here. It consolidated in July, leaving a large range signal reversal bar, a Gilligan sell signal. A Gilligan is a gap up to a new 60-day high with a close at near session lows. Not only was this a Gilligan, but it was a large range Gilligan, and it was a key reversal day to boot. So the Gilligan is a strategy I created to identify short-term exhaustion. Sometimes it marks big picture buying climaxes. However, follow through is key, and as you can see, you never really got any follow through in CVNA. It did pull back toward its 50-day right here for one day. It made a stab down, but again, you got no follow through, and it couldn't even test its fully test the 50-day, this blue line here. When it offset that bar here, it was talking. When it offset the Gilligan, the high of this reversal bar, the signal reversal bar, it was screaming. Regrettably, it gapped up this day on earnings, so there was little to do. However, following that recent breakout, well, first of all, it's worth considering that while CVNA did not close at session highs on earnings, closed right here actually towards the bottom third of the range. What must be considered is the close within the context of the prior day's close. So it still was a big gainer that day on a large expansion in volume. So following that recent breakout here on the 9th, CVNA flagged for 2 days. This morning it triggered an opening range breakout, signaling it was poised to pivot out of this little flag pattern and leave a trend day higher. So we sent a note to subscribers to initiate a position as it came out of that opening range breakout. We're going to take a look at that. So here's a 10-minute, and here's August 14th, and here's the opening range breakout right here. The first half hour's range popped out, consolidated as sometimes the case, and exploded higher. Then you got the first pullback, textbook behavior to test the opening range breakout. And now you can see it's put in a little cup and handle. Here's a cup with a handle, and it popped out of that, and it's got a fractal of that pattern, a mini cup and handle within this little cup and handle. Remember, this is all on the 10-minute basis, so we're talking about 2 days, but as an intraday trader, it's worth recognizing these patterns. So you can see that you have a little cup and handle, cup with a little handle right here, and Carvana looks to be pivoting out of that here, and this pattern is basically within the context of this larger pattern. So in my experience, when you see larger patterns within smaller patterns within bigger picture patterns, patterns within patterns, it stacks the odds in your favor of follow through. So that's it for today. I would keep an eye on both of these because they look higher, and we'll catch you later.